Well, thank you for staying tuned. It's still Business Nigeria. Now, total trade for Nigeria hit 12.02 trillion naira in the second quarter of 2021, indicating a 23.28% increase from the 9.76 trillion naira recorded in the first quarter. According to the National Bureau of Statistics, the total imports into the country rose by 1.45% to 6.95 trillion naira in the period under review from 6.85 trillion naira in the first quarter. However, the total exports in the country at the moment now stands at the total exports from the country grew significantly by 74.72% quarter on quarter to 5.08 trillion naira from 2.91 trillion naira recorded in the previous quarter. Part of the details in the report also indicates that imports by country of origin shows that the majority of goods imported during the quarter originated from China at a value of 2.078 billion naira. All of these figures, let's get to understand it and make more sense of it. And how does this really affect the performance of the country's trade balance and potentials of its export proceeds in the foreign market? I introduced him earlier as an associate research analyst at United Capital PLC, Mr. Ebitoye Ate. Mr. Ate, it's good to see you. How are you today?
I'm good, Tolu. How are you?
Very well. Yes, Nigeria's total merchandise trade, which hit 12.02 trillion naira in the second quarter of 2021, well, it reflects gradual improvement in global economic growth. But this isn't enough to celebrate, as continual foreign trade deficit continues to pile more pressure on the country's exchange rates. How do we begin to measure up much more strongly along the lines of increasing our product base to trade in aside oil?
Okay, yeah, so what we saw in Q2 and what we've been seeing basically since last year is that the first thing is in Q2, our exports went up. This is because of, first of all, year on year, just in year-on-year comparison. This time last year, we weren't exporting as much and all prices were lower. So if you bring that, if you couple those two into play, you're going to see this rise that we have seen. And quarter on quarter again, the rise is pronounced, even though our volumes have not really gone up in terms of oil production. What we saw was that average in Q1 was about 61, and Q2 we saw prices were relatively high, around like 68, 69 of the average of Brent. So that's obviously been the first thing that has helped our exports grow in the last year and in the last quarter and quarter. Obviously this is not enough because oil and oil kind of products still amount to about 90% of our exports. So clearly there's need for diversification, and we're not yet out of the mud because we're still technically, we actually still have a trade deficit. So we're clearly not out of the mud, but as you said, this is progress coming out, and we just need to try and move to export and kind of expand our export base, because a lot of the stuff that we export, our products are not particularly yet refined. So when you look at the value chain, you're still getting like the lowest value of what you get if you were to kind of refine that. If you just imagine if this oil that we're exporting was refined oil, like the ones that we kind of export the raw product and buy it back. Imagine we did that for tomatoes, for cocoa beans, for just a lot of other minerals. Imagine how much that would do for our kind of our forex and our basically our foreign exchange market and just the general savings balance, because obviously at this point we're not getting the purest and like truest value of what we can actually extract from these minerals that we have, or these potential exports that we have.
Now, despite the moves by the FG, of course, and CBN to diversify and create substitute export value for crude oil, well, it seems not to have reflected substantially in Nigeria's international trade numbers. Now, to you, what do you really think, or to what extent do you think we can explore value addition in this regard? You know, key investments in, let's say, agriculture. We aren't having heavy investments trickling, would you say?
Okay, so firstly, the CBN ban in like 2014-15, the first ban, I think they're talking about the ban of forex. I mean, that was more of a defensive stance, more or less. It wasn't, although potentially it could have led to potential exports, well, the process of it was more of a defensive stance to more or less defend forex and basically allocate forex to certain things. A lot of countries have done this in times where forex has been scarce. But if you just look at our export base and our GDP composition, agriculture is one of the biggest segments in our GDP if you were to do a sectoral allocation into three. But a lot of the agriculture that we post is a lot of crop production, for instance, and the value add of crop production and potential exports of crop production is relatively much lower on the value chain than it would be if you were to process these crops. Like again, I'm going to use tomato and tomato paste. For instance, the value you get value derived and potential forex inflow from tomato paste is much higher than it is from, say, exporting tomato, which is why I've seen some of our neighbors. I think you've seen Ghana, you've seen Ivory Coast basically say that now they're going to stop exporting cocoa. That's the plan anyway. And that this company should come and set up there and make the final refined product. Because obviously at that point now you're going to see that they have the power because it's their product, one, and two, they're going to be able to extract more. It does get more forex from the product rather than just exporting the raw cocoa. They to come and make the chocolate here or the other medicines that can be made from cocoa beans. Then you're going to see that obviously it's just going to be better for the forex situation and the balance of trade for any country that goes through that process. So ours is more of a defensive stance. I think obviously the policy reform that you should be looking at is more ways to kind of subsidize, because agricultural industry in a lot of countries is actually highly subsidized, which it is in Nigeria, but maybe the way the subsidies are being allocated is not the most efficient one. Two, also we have to understand that there's a fiscal imbalance in Nigeria. So the CBN and the FGN can't really do a lot of things. So because they're limited and they're tight, because funds are tight. But what you want to look at now is maybe deregulation and the language, because then that will obviously determine private sector involvement coming in and coming to plug that kind of gap, that funding gap that is not there in our market.
Nice breakdown. Great stuff there from you. But let's now look at bottlenecks that makes Nigeria second or third rated along the West African corridor. We know what's happening in Ghana. It's now a preferred destination for companies, tech companies. To what extent do you see these reforms redefining our international trade policies and positioning? Don't let us forget, AFCFTA is still somewhere hanging.
Okay, yeah, so I'll take the first one, I'll take the AFC one later. So, yes, it's true. In the last decade, I think we're about number 3 in West Africa alone, which is funny because we're meant to have the largest ports, because just our sheer size of our economy should mean that we should actually have that. But, our ports have been plagued with kind of an infrastructure deficit, first of all. Because, infrastructure deficit is a thing that's across SSA, but infrastructure is also a function of like how many people are using those things. So that's how you see us kind of being relatively affected by that. And the second thing is also just the roads and so this is another infrastructure question. Because in Ghana as well, they didn't just build the ports, they actually built the roads to the port to make it better. So it's actually even cheaper to kind of ship to Ghana, to ship to Togo. So people, a lot of exports are going through those ports rather than come through our ports. And then lastly, it's kind of a perception of corruption issue there, and we've read that other than the cost, we've also read that the kind of MPA and the bodies in the ports are doing a lot to kind of crack down on that corruption. When the short term, we're still kind of suffering from these problems that plaguing our export industry, so our trade industry. So that's actually one thing. Then also on this kind of services side as well, just kind of regulations and soft policies obviously affecting us in terms of now trading services, for instance, not even trading goods. So generally, the main thing is actually regulation and implementation of regulation, because we actually have the market. So if you get those things right, it's actually not a competition technically. And then the AFCA, there's the free trade agreement. Again, our share of our economy meant that if you didn't join that thing, it wasn't going to kick off holistically. But however, when you look at the fact that we only have one major export, and we have a market, and even though that market household income hasn't really gone up in the past 5 years, we still have spending power in Nigeria. So you're looking at a situation where at this moment we're not as competitive as we should be before entering the agreement. But again, as I said, everything is just about regulation and just implementation of that regulation. We're not as far off as we think we are generally.
All right, almost finally, infrastructure development in the logistic value chain is what sets advanced economies ahead of developing countries. Now, like Nigeria, now what's making it difficult to replicate such working models and then fit contextually to meet the unique market here?
Okay, so the first thing, as you said, infrastructure is a function of how many people actually using that infrastructure. So the first thing is funding, and the second thing is still funding, but is on the government budget and implementation of capex, for instance. Like say this administration has been very ambitious with its capex allocation, but implementation hasn't always been strong. I think capex in the past 10 years around 60% implementation. Some years even as low as 35. I think last year was low, and we've seen like sometimes capex budget is roll over to the next year more or less. So that's definitely the first thing, and then the second thing as well is the funding in terms of PPPs. PPPs haven't really been as popular or as successful in Nigeria as they should be. So ideally, you're looking for that international funding, that private funding to kind of plug these gaps. And the reason why we're not seeing this is obviously we've seen FDI in Nigeria drop from about 7 billion to about 1 in the last decade. This again is kind of like maybe that inconsistency with regulation and uncertainty. Because everywhere is risky, but it's just if you can kind of put certainty in the eye of the investor, it's obviously going to reward. It's obviously going to be more kind of like encourage to come and reward to come and invest in your economy. So generally, that uncertainty is definitely one of the things that is affecting funding. Also, that's the major thing that's holding back funding. Just the uncertainty around policy.
Let's wrap up on this note. Now, what new initiatives and dialogues do you see playing out in investment promotion as we are largely marred by production challenges, insecurity, and of course, we can go on and on?
Yeah, so I mean, you're most likely going to see the FGN kind of bulk up on his kind of like road shows for I know recently we're going to probably go on a Eurobond road show, just those kind of things to basically show like the kind of reforms that the Nigerian government is willing to take to attract investments, because as you can see, the kind of debt is kind of eating a lot into the budget, and at this point there has to be some kind of slowing down of the aggressiveness of the language and just like being friendlier to investments generally. So that's the first thing. The second thing is also you're going to see more reforms. I mean, recently we've seen 2% reforms to kind of bulk up this thing. We've seen VAT has gone up in the past 2 years with the Finance Act. Now I've seen the PIB pass. PIB is obviously again going to ideally is meant to encourage more drilling. So at this point where we are already doing well on exports, you're going to see more oil exports. So that's obviously going to bulk up our trade balance. I mean, ideally. So those are the plans. So you're going to see more reforms generally coming in, and just kind of a softening of the tone of the regulators, let's say, in the coming weeks and months.
It's a good way to leave it. I've been speaking to Associate Research Analyst, United Capital PLC, Mr. Bintoyati. Thank you very much for making more sense of all of these figures for us and, of course, for our viewers. Enjoy the rest of your day.
You too, Tolu. Thanks.